IVM.
I find it baffling how I've lived my life without CRED up till now because now I can never go back. With CRED Protect, you will never miss a due date again because the app reminds you to pay your bills on time. Plus, it detects any hidden charges on your bill and gives you category-based analysis of your spends. It's like they've thought of everything to help make management of my cards frictionless. Don't believe me? Well, just download the CRED app. Folks, welcome to Paisa Vaisa presented by CRED, the most rewarding credit card bill payments app. I'm your host Anupam Gupta, B50 on Twitter, and really exciting episode. This is a company I've been wanting to talk to for a really long time because they're doing something exciting, and we are talking real estate today. I don't have too much of real estate on Paisa Vaisa with everybody obsessed about stocks and mutual funds and all that. But we're talking about a new concept, guys. You have fractional ownership. My guest, Sudarshan Lodha, CEO and co-founder, Strata. We'll get into the details of Strata and the idea of owning commercial real estate right after we take this really short CRED convenience break. Your computer can be compromised in many ways, and all cyber attacks ultimately affect your files and apps by accessing everything that's on your PC. Intel vPro keeps you safe from cyber attacks using the Intel Hardware Shield, which has 3 groups of capabilities. First, advanced threat protection, quickly detecting issues like ransomware and crypto mining. Second, below the OS security, identifying unauthorized changes to hardware. And lastly, application and data protection, preventing malware injections. So, secure your organization's productivity with Intel vPro's hardware-based security. Visit intel.in/IT heroes to know more. Remember Intel vPro, it's built for business. And welcome back to this episode of Paisa Vaisa. Before I bring in our guest, folks, disclaimer. Always disclaimer. Please do your own research before investing. This is a podcast, not an advisory, not a recommendation. And with that out of the way, let's get started. Sudarshan, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you so much for having me on your show.
Great. So let's start with a very brief intro for people who are hearing about Strata for the very first time. Tell us what you guys do.
Great. So before, I can just give you a quick background about me as well. So before Strata, I've been a lawyer for 10 years, started my practice as litigation for the first 5 years into real estate, and then went into private equity, into real estate and into startups as well. So represented IIT Madras and all the startups around that, and been a part of the entire ecosystem for the last 5-6 years. So I've always had a keen interest in investments in general. An active investor in different asset classes, been following your podcast and listening and all the advices from multiple other, keynote speakers you get on your platform as well. But there's one asset class which fascinated me over the years was commercial real estate. And commercial real estate as a sector been an outperformer, but something which we realize has always been in the close circles of the ultra HNIs in general. So as Indians, we know we love 2 asset classes the most. We love gold, we love real estate, which ideally formulates more than 50% of India's wealth in itself. But I would say we are all investing in the wrong kind of real estate, right? Like people invest today in apartments, lands, expecting massive returns. But the truth are, returns are mostly in the range of 2 to 3%. And for value appreciation, which is either a hit or a miss altogether. Whereas CRE, which is in the hands of the ultra HNI, they're able to generate about 9 to 12% kind of rental returns, and the value of appreciation is comparatively much higher than what a residential can offer. So as India is seeing a massive growth from an economic standpoint, I think we are at the cusp of a major hockey stick growth, whether it's manufacturing or IT itself, which I believe is going to grow even bigger. I think this is a great opportunity for us to keep offering or start investing into grade A assets as such. So as such, this is where we are. Strata is an online platform which allows investors to own fractions of grade A commercial real estate. We are making the whole CRE investment landscape or other real estate investment landscape transparent, accessible, and liquid at the same time. So we started off in 2019, and as of now, we have over 10 properties managing close to about 480 crores in AUM with more than 1,000 plus investors who have invested on our platform already.
And what a year to start, huh? You leave everything and you say, chalo, let's start a new venture, and you're all excited, and boom. Like what? I don't know. When in 2019 did you start?
So it was December 2019 when we started. And rightly said, right? When I was discussing with the parents, I think this is great. I really am pumped to do it because I figured this as litigation and other things that this is a massive problem today. And I can give you a classic example, right? Today, when you want to buy a property and you don't have all the funds, what you do is you talk to your friends, you talk to your families and say, hey, let's buy this property together. Now, two things which can happen, Anupam, is first, your families might always doubt you. Hey, Anupam, why are you even bringing this opportunity to me? You might have the money in place, right? So they'll always doubt you. But your friends, who are rather more trustworthy, I would say, okay, Anupam, I trust you. But two things can happen. I might not have the liquidity what you need, or I don't see the vision in that opportunity in itself. And then the opportunity slips. You go to another party and you tell your friends, yeah, I wanted to buy this property. And somebody says, Anupam, you should have told me. I would have invested with you. So what we realize is people always go to the inner circle of friends and ask, but then there are a lot of like-minded people in India. So that's why we felt that this is an opportunity where if we can build that trusted platform where like-minded investors can come, have rules and regulations which are governing the entire investment thesis of what they are coming in for, let's go ahead and build the entire business altogether. So that's how it all started. Pandemic was a game changer as much as possible for us because when the whole world was, I would say, being safe at home, enjoying their times with family and friends, playing all sorts of games, etc. Our entire company was working 18 hours a day, right? We felt this is the golden moment. Our entire TG is at home. Stock market is all over. Crude price was all over. Gold was all over, etc. We said what is more resilient is real assets, which people could hold on to and enjoy returns for a long-term 10-year story kind of thing. So we made the most of the pandemic during those times and went ahead and told investors, when you can buy mutual funds online, you can buy gold online. I'm bringing real estate online for you, right? So that helped us, I would say, in a positive way, and hence we've been able to scale up.
I'm absolutely thrilled for the fact that you actually got your bet right. I mean, I'm sure that there would have been moments last year when you're wondering how this is all going to go down. But let's leave all of that aside. I have one question that came to me right now when you're talking about friends and all that. Okay, so Sudarshan, I don't know. You're in Bangalore, Delhi. Where are you?
Based out of Bangalore.
Bangalore, right? So I don't know whether in your part of town, this idea is very common or not. I heard it back in 2007, 2008 when the last real estate boom was in its frenzy. There is a group of friends get together. Okay, they either buy land directly or there'll be some kind of a intermediary, typically someone like a chartered accountant or whoever it is, a broker, who will liaise with this bunch of friends and a builder. Okay, what he'll do is he'll arrange for the group of friends to acquire a piece of land and hand it over to the builder. Okay, now he takes the responsibility of probably doing due diligence on the builder side, because hey, let's say that there are 5 IT employees who are making great money and they decide, let's diversify, let's buy land. And this is, folks, if you're listening to this for the first time, this is not something that's very uncommon. So Darshan will probably back me up out here in this. What's your view of that? This stuff which people do, trusting a builder with their money, that the builder will actually execute the project, sell it, and these guys will make their money. I mean, there are people who offer this as a structured product to HNIs also, promising some, I don't know what kind of returns. Talk to us about that.
Anupam, bang on. Yeah, I mean, this is how the entire industry has been functioning. You probably told 2007. I think it's forever, right? When friends, families have always bought properties like this together, right? Because then for real estate, because it is such large sums of money, and people have heard issues coming in when they buy properties. And as a lawyer, I've seen when I was litigation, brothers fighting, disputing. Okay, I want to lease it at this price. I want to sell it at this price. The other says, no, I want to sell it at a higher price, etc. And your entire money is stuck for a longer duration. So this is where we felt that this entire sector is so disorganized across that if we can organize it, there's such an amazing industry which can create actually a lot of wealth for a lot of guys instead of wealth being parked or getting blocked rather because of internal disputes as such. So which is what we are solving for, Anupam, in a big way. Bhiwandi is one of the largest warehousing sector or a market in India today, is completely owned by multiple people who have invested together. What you mentioned about structured products people have sold, they've done the same thing across, right? Now, but again, no idea, no transparency. What is the price going in the market? What price to sell? When to exit? When to enter? Which is a very, very important fundamental for real estate in itself. People have zero idea, right? So this is what we felt, that if we propose this as a platform, more transparent, and give investors these opportunities, this is great. Now, this is one side of things, right? That we're
Hmm.
solving for capital, etc. One more thing which is there is accessibility itself. Now, presuming, let's say you're from Delhi, and here is an opportunity leased to, say, Accenture as an office. You don't even get such opportunities together. These are not assets which are listed on your housing.com, 99 acres, magic bricks, right? These are assets which are floated in inner circles of friends or inner circle of these HNI brokers for that matter, and it is sold or traded amongst these platforms in itself. So, which is what the idea was, that people have wealth, they want to diversify. You're in Delhi, you know Bangalore is a great growth story, I want to participate, or Hyderabad's a great growth story, I want to participate. But how do I even find such opportunities? Even if I find, how do I even ensure it's the right price, legal is clear or not, etc., etc. So this is what Strata is solving for at a larger scale altogether.
Yeah. So Sudarshan, here's the thing, right? I mean, one of the reasons why this had this product, let's just call it product, okay, for the sake of convenience. One of the reasons why this product is only in the realm of HNIs, ultra HNIs, is because they're savvy, they're sophisticated, they know how to handle this, they know what they're getting into. You're talking to someone who's in an IT job 12 hours a day, he's got enough to think about, and he puts his money into something like this, and he gets stuck, and he's, for the lack of a better word, he's screwed, right? Because this is not a mutual fund. This is not a stock. You can't just buy and sell whenever you want, get in, get out. This is illiquid, which is exactly why the returns are what they are. Therefore, I want to get into the concept of fractional ownership, right? Because that kind of acts as the buffer out here, along with the product that you have and the work that you do. So let our let's explain this to our listeners at a generic level. What is
Hmm.
fractional ownership? Is this, how old is this? Is it new to India? Have people in the world been doing it all along? Let's talk about fractional ownership.
So I'll keep it very straightforward, right? You owning a stock of HDFC is nothing but you're a fractional owner of an HDFC bank, right? So it's similar to what we're doing. The entire stock market is nothing but a fractionally owned pieces of a company. We're trying to do the same thing for commercial real estate in a nutshell, right? So structure is very clear. Imagine if there is a 10 crore property, it might be too much for one individual to invest. And in investments, thumb rule is diversify, right? But today, real estate does not offer this as a proposition in itself, right? You have 10 crores, you have to own the 10 crores or you don't own it. So we are trying to change that by saying, okay, cool. Here's an opportunity we have floated an SPV, a special purpose vehicle, which will own the asset, similar to what an HDFC bank is for that matter, as an example. You own a piece of the company, which eventually will be the only owner of the property, right? So as shareholders in the company, you're now indirectly the owners of the property. So any rental income which comes in, it is paid in proportion to your ownership. So if you imagine put 1 crore for a 10 crore property, which is generating, let's say 1 crore yearly rent, your pro rata rent comes to 10 lakh rupees, right? So that gets paid to you, on a month-on-month basis as such. Now, this concept is pretty popular in the world. Fractional CRE startups have been around in US, in UK, in Europe, right now in Singapore and Australia, which is catching up in a big way for over 5-10 years now. In India, especially in the last 4 to 5 years, there are multiple companies which are now trying to do, trying to change the entire way developers sell the assets by splitting them into multiple smaller units, like what you brought up, or structured ways, how certain HNI or brokers were doing it, or financial advisors were doing it. What we are doing is just making this entire thing more formal, more professionally driven, and managing it. So, like you said, an IT guy who has no time and wherewithals to manage. It's not just the IT guy. An ultra HNI also does not have the wherewithals to do it. He's savvy. He thinks he knows everything, but he doesn't. So people's perception about real estate is it can run on auto run mode. It's a no-brainer business. It's very easy to do it. But CRE, the dynamics have changed a lot. Tenant management is a very, very important aspect today. Keeping a track of what the market rates are going is very critical also at the same time. So these are things which we handle very professionally, and trying to ensure that an ultra HNI or even an HNI who does not understand CRE can proactively invest with us and enjoy the returns. Now, where are these IT people or normal HNIs investing today? They're buying dozens of residential apartments. We have an investor who is the MD of the largest IT company in India, has 14 residential apartments with him. Residential gives a returns
Are
of
you kid?
2%.
Are when I hear people telling me that they've got 10 or 20 mutual fund schemes in their portfolio, I'm like, oh, that's a lot. You're telling me that this individual, whoever he is, and I wish him all the best, obviously. I don't know if he's listening to this episode. Hats off. 14, did I get the number right? 1 4.
1.4. I'm not even kidding. That's the amount of apartments, and to a total tune of investment of close to about 28-30 crores right now.
Which is earning him 2% a year.
2% a year.
Oh, okay.
Correct. I think blended would be a little higher because he's been buying across. So there are apartments which he bought earlier, which is now fetching a higher end. But having said that, he's like, hey, I generate 2-3 crores a year in terms of salary. I can never aspire to own a grade A office space, right? Because the floor of a grade A office space is 40-50 crores. I can never aspire. And I want to invest into real estate, a good chunk of my money, because stable, I don't understand mutual funds. I don't understand stock. I don't have a financial advisor. I go to Zerodha and trade myself directly because my friends told me to buy the stock. I buy the stock. This is the actual problem today in the market. Such a big white space. Financial advisory.
He's actually making sense. Sorry, go on, go on. I mean, when you put it to me, I said, the guy is actually making sense. If he thinks that real estate is a good opportunity, well, it is, maybe the commercial part and not the resi part. But sorry, go on. Yeah.
Correct. So again, financial literacy is a huge thing, right? Financial advisory is a huge concern and the biggest white space in India. So, but having said that, now that we're telling him, hey, we can generate 4 times better returns, and he knows, like an office property or any commercial is in a high street, far better location than a residential, which might be inside a street for that matter, right? So he knows the chances of this appreciating versus his residential is anyway a no-brainer. But now that there's a proposition what our platform is providing, he's now liquidating all his property. So he's already liquidated one of his apartment and given that entire money to us because he's like, hey, long term, everything is solid, meets my criteria of financial goals of parking a good chunk of money into residential or real estate in itself. Now I can do commercial, is what we are trying to do. So we are telling people that, hey, we don't want all your money. We would never want you to invest everything into real estate, but make your wallet share, portfolio allocation, what you're trying to do for real estate, what you're trying to do for fixed deposits. We are a great alternative fixed income product for you in that, right? We can generate you 7-8% in terms of rental returns with a yearly escalation and a value appreciation, which in residential, I don't know if you can make any more, but at least this commercial has some chances of making some value appreciation altogether in comparison.
There's the reason I'm smiling, right? Because I should put this episode out with a trigger warning to the equity bulls, when they've got someone who's telling them that real estate is actually a much more, okay, commercial, whatever. Commercial is actually a very compelling investment opportunity for a lot of people. You might not like it. I mean, people have got this entire impression that real estate is a whole mess. Anyway, so Sudarshan, I like the comparison you made between me buying one share of whatever HDFC Bank or Reliance versus, I mean, it's the same thing. I am a fractional ownership. But one small difference is that when I'm doing that, I have got the Bombay Stock Exchange. I have got the company, which is, which has articles of memorandum, whatever, which protects everybody, protects the minority shareholders. The listing agreement between the company and the stock exchange ensures that every quarter there is. So, so there is some sort of regulation, there's some sort of structure. Ultimately, if the company turns out to be a scam, mera paisa to gaya. Okay, so all that apart, here we've got something called SPV. Okay, explain that concept to our listeners. What is it? If I'm part of an SPV, how does that work in terms of ownerships, liabilities, risks, etc.?
So Anupam very rightly said, right? When you're investing in any of your Bombay Stock Exchange companies, they have AOA, MOA, rules and charter regulations around it. Similar, we are just a private limited company which is acquiring the asset for you. So special purpose vehicle stands for, SPV stands for special purpose vehicle, which is a private limited company in our case, which we float for each asset. The ownership in the asset is through the structure. Now we give you 2 type of equity holdings. One is 10% as equity shares and 90% as compulsory convertible debentures. Now we do this structuring for tax efficiency. So whatever money which the company generates, the SPV generates in the form of rentals, we distribute it to the investors in the form of interest. So there's no money left at the company level and everything, it's a pass-through entity at the end of the day. So as a shareholder, your liability and risk is absolutely none because you're just a shareholder at the end of the day, right? And this company has only one job, which is owning one asset and enjoying the rents out of this asset and pay its investors the returns on a month-on-month basis. So your risk is very, very limited at the same time. And all the rules, what you just brought up, if you were invested through any of the BSE platforms, same rules, same charter documents are replicated over here where everything is getting governed at the same time.
So the only difference being that these shares are not traded. They are probably private shares. And, let's say, God forbid, if anything goes wrong, then there is no value for the shares, right? If I've understood that right.
Anupam, yes and no. This is yes, the fact that this is not traded, that's a difference. But whatever said and done, your money is still safe because it's parked into an underlying real estate, which is not going anywhere. We are not manufacturing more lands in India or the world for that matter. So, and urbanization is off the roof irrespectively. So your money is safe irrespectively. Capital protection is 100% because we give our investors that access to opportunities where they know very well what are the other sale transactions which have happened in the market or in the same building for that matter. Complete transparency is provided to them, and then we are investing. So having said that, they know they're not paying a massive premium, or they're not buying at a discount, or they're buying at a market. They have very well aware of what it is. So irrespectively, this is a grade A office or a grade A warehouse, your money is safe. Money is not going anywhere.
Folks, will get into the risk on the other side of the episode, but coming back now to these concepts. So Sudarshan, how is fractional, the obvious question that comes up is that why not REITs? I mean, that's the same thing, right? So just to understand this, and REITs, at least now that you have three of them, there is some kind of regulation. How is fractional ownership different from REITs?
Well, let me jump in, right? I mean, right now this space is not as regulated as what a REIT is today, right? And REIT also took several years for it to come to where it is today, and
Very long time. Yeah.
Still amendments, right? Still amendments. I think the recent amendment was you can even buy a stock. If it's 300 rupees, you can buy for 300, which was earlier 50,000 as a threshold. So government in India in general, the view is they want to try, test, explore how it goes, and then keep amending, right? I think your e-commerce regulations are still evolving in spite of 10 years in being in existence as well. But it's a matter of time, which we think that this space would also get very regulated for investors to come in, especially where SEC is regulating the space through FINRA in US, FCA is doing it, Financial Conduct Authority is regulating the entire space in UK and multiple other places where there are regulations in. So it's a matter of time. But having said that, in India, SEBI recently announced the whole idea of accredited investor. This is honestly one of the great ways we think that regulators are looking at this in a very proactive manner, and perhaps over a period of time we feel regulations might come into the industry which we're trying to bring in as well. So that is one part which we're very hopeful also at the same time. Now to give you a difference between a REIT versus what we are trying to do. So a good way to think is, like I mentioned earlier, right? The difference between owning your stock of HDFC in comparison to a mutual fund itself. So now you have mutual funds where you can invest because the mutual fund is also buying an HDFC stock. Then why are you buying an HDFC stock also at the same time, right? You rather have a fund manager who's handling everything on your behalf. So same way in our structure of investing, you're investing into a specific grade A asset, whereas a REIT, you're investing into a fund which owns multiple properties, etc., etc. Now, the biggest advantage what a REIT has over what we are trying to do is liquidity, right? And the entry barrier. REIT is highly liquid. At the same time, you can liquidate tomorrow, just like gold if you want to, for that matter. And at the same time, the cost has become lower from 50,000. It's going to come down to whatever the share price is at the same time. Now, having said that, there are a lot of places where a REITs fall short in a big way. Now, REITs have under construction assets, which means they can be non-rent producing properties in their portfolio, which can bring down the yield drastically. Our platform only invests into rent yielding assets, which means you need to have an asset which is already tenanted out. There's a rent which is generating, and you get the monthly returns at the same time. So today, I think Embassy has about 13 or 14% of their portfolio which is not generating any rents, which is under construction, and Mindspace has close to about 7-8% also at the same time. So that's one of the core differences which you have. Now, a REIT is obligated to pay only 90% of their rents as free cash flows. This is after all the interest payouts which they need to pay for the loans which they have, all the other costs which are incurred at the same time, and then they pay. In our thing, we pay 100% because you own the property. We are just a platform enabling you to own it, which means whatever comes gets distributed to you because it's your asset at the same time. Now, the biggest issue with REIT today is because they are traded online. When they're traded, which means you're volatile. And people's perception when it comes to real estate investment, and that's how they perceive a REIT. REIT is more a financial investment, and they want to park a part of their portfolio towards real estate investment, which they want it to be non-volatile, stable, long-term value appreciation. Now, I'm taking Embassy as an example, and I feel by far it's one of the best REITs today in the market. Embassy listed at about 300, 320 rupees. went up to 460 rupees. And when the pandemic hit, it crashed to 300 rupees also at the same time. And I think now it's trading at about 370, 380 rupees for that matter. Now, this is what is the biggest change what we are trying to do, because what is contributing to the appreciation of a REIT's price drastically? Because if the only asset underlying is, say, real estate below, and let's assume it's 10,000 rupees at the 300 rupee listing, when it went to 480 rupees, which means your property value from 10,000 has suddenly become 17, 18,000, and then the pandemic hit and it crashes back to 10,000 again, right? That doesn't happen in real world, right? So that is one of the big changes, or one of the big differences between what a REIT has versus our product, because this is actually backed by real asset, which is also REIT, but because of its stock market volatility, which it garners, is what is the biggest difference what we are trying to bring on board versus what a REIT does not offer today. So that is one. But imagine you buying at a higher price, you bought it at 450 rupees, you are ideally in red already. Forget making any rental yields, you're already in red for that matter. And the rental returns remain the same, because at 300 rupees, I think Embassy was generating about 7.5% in terms of rental return. So if you bought it at 450, your rental returns are 3 to 4% now. And obviously, if it's back to 360, 370 levels, you're already in red also at the same time. So point is, people's perception towards REIT, and I've seen that from a lot of our investors, is they want their real estate portfolio to be non-volatile, stable, long-term value appreciation, and they're parking only that part of that financial portfolio allocation towards a REIT in comparison. But having said that, in India, close to 2.8 lakh apartments got sold last year. 45% of that was for investment and 55% was end use.
Whoa, wow, okay. I mean, I haven't heard the statistic. Where we got it from, man? It's very interesting.
This is RBI data. It's on the RBI website.
Wow.
Feel free to verify it at any point. Now, let me just, for simpler math, let's keep it 50-50, right? So 1.4 lakh apartments got sold for investment, 1.4 lakhs for end use. Now, a good apartment is 1 crore, for that matter, as an average. We're talking about 1,40,000 crores getting parked for 2%. With the hope that I'll make 2%, right? Good chances if you lease out the properties, because the supply is so high. If I have to go and pay you 2-3% in terms of rental returns, 6% is the home loan I get irrespectively. I rather just buy that house and pay double of it rather than paying you rentals at the same time. So having said that, that money is getting parked every year, and fixed deposit numbers are at an all-time high altogether, right? In multiple lakhs of crores for that matter. So this is the money which we want to park into commercial real estate. Now, REITs is also trying to tap the same thing, but retail participation in REIT, and this is all in public records. Brookfield retail participation is 6%, Embassy is 14%, Mindspace is 7%. So clearly, if you see, still very institutionally driven structure today, whereas this is owning real estate directly, right? So we tell you, hey, this property, this tenant, this is the micro market. Why don't you own it yourself? So that is one of the big differences what a REIT has versus what we have also at the same time. Now, on the last point, when a REIT decides to sell an asset, you might be thinking, okay, no, it's 450 rupees, which means effectively it's 17,000 rupees for that matter. But real estate is not sold at your stock market price, right? It's sold at the actual real estate price for that matter. So it'll be still sold at probably 10,000 rupees for that matter. But according to your share price, it might be at 450 bucks at the same time, right? So that's another big difference. It might not be in direct correlation to what the REIT share price is versus the actual real estate price it can have in itself. So that pretty much sums up all the differences what we are offering versus what.
Pretty extensive. So before we go into a break, Sudarshan, last question on this first half of the episode, yields and IRRs. Okay, now maybe you understand it, I understand it, maybe some listeners also understand it, but let's get into just some fine detail out here. What's the difference? What is yield? What is IRR, etc.? What am I actually getting when I invest with Strata?
Great. So the kind of rental returns which we are able to generate is in the range of about 7 to 9%, subject to property. We have assets which are even at 9.5% for that matter, but again, it's subject to property, right? So that's the kind of rental yields you make. IRR is on value appreciation. So a good property generates conservatively at 3 to 5% year on year, and optimistically you can make about 7 to 8% as well. Now, if somebody is proposing, you'll make 10% year on year, run away. You'll not make that anymore. Indian real estate, that boom which you were speaking about in 2008, people were doubling the money also. It's a very mature market now. You don't double your money every 2 years for that matter. This is a long haul investment in itself. So we are able to generate rental returns, like I said, in the range of 7 to 9, where your total IRR can be about 12 to 18, subject to property. So if you're having that part of portfolio allocation, which you want to do for long term, which means you come with a minimum 5-year investment horizon, and generate that kind of returns, 12 to 18% is what, because your rental returns itself can be about 9-10%. So even if you make 2 or 3% in terms of appreciation, you'll hit your 12% IRR, which we want to do. So I think in today's world, if you're making double digit in terms of returns, hands down, close your eyes, go for it, right? And capital safety respectively exists because it's real estate at the end of the day.
Very interesting. It reminds me of the total return index that we have for the Nifty. So I'm guessing the IRR is like a total return out here, and the yield is like a dividend yield that we have for stock. So folks, on that note, let's take a short CRED convenience break. When we come back on the other side, we're going to go deep into Strata and the product that it offers. Don't go anywhere. Really exciting episode. My guest, Sudarshan Lodha, CEO and co-founder Strata. We'll be right back.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into a show about crypto with me, Rohan Joshi, my new adventure on IVM podcasts. CoinSwitch, kuch to badlega.
And welcome back. Sudarshan, let's get to it. Let's talk about Strata, how it works, what are the various services that you offer? Do you have a minimum signing amount? How does this work?
So great. So Strata operates like a fully digital investment platform, right? And one of the core theses when we were building it, where like today you can buy stock on, you can buy shares online, you can buy gold online, you can buy mutual fund online. Why not real estate, right? So, that's what's our thing. So a very mobile first approach to our entire thing, because we're changing to that direction in a big way. So as an investor, it's simple. You sign up, you do your KYC. Whatever assets which are listed on our platform, we do one asset at a time. We do a webinar, we explain you the entire opportunity, a very open forum. You can ask any questions you want to in front of all the investors who are looking at investing, and then you invest and start making money. As simple as that. So you can be enjoying your holiday in Bahamas for that matter. There's an asset listed.
Maldives with Instagram. Sorry.
And Maldives, you decide, hey, this is good. Let me invest. It's simple, completely online, and you can invest. So anybody can invest today. On our platform, individuals, companies, HUF trust, partnerships, NRIs, no problem at all. We just got our Sharia audit done, so we are going to be a Sharia compliant product as well. We're not accepting FDI and trust money today, but very soon we'll start opening those doors for them as well. Now, as a platform, we manage end-to-end, which means you get real-time accurate market data. We identify the assets on your behalf. We manage the assets on your behalf. We take care of tenant management. We give you a valuation report every 6 months so that you know what's happening in the entire market. And when the time comes to sell, we advise you, hey, this is the time for you to sell the asset, and then we take their approval and decide to exit their investments on their behalf. Now, as an investor, he can track everything through a simple online dashboard, and there's a dedicated investment manager. Any point of time, he has any queries, reach out to him and they'll answer all the queries. So the minimum ticket size today is 25 lakhs today on our platform. We've kept that as a bench to ensure there's more mature investors today who are investing, but maybe over a period of time, we may want to reduce it as such. So based on the market's approach and how our processes can allow, things might change in future as such.
Okay. So two questions there actually. So what are your costs and your charges? Let's first look at that.
So we charge an upfront small acquisition fee for doing the running around, paying some brokers who propose the opportunity to us, etc. Again, as a market, if we incentivize people, the best of best deals will flow to you as well. So there's a small acquisition fee of 2%, which we charge upfront. Then a 1% of your investment amount every year is billed as your management fee. And then when you want to exit, we have a performance fee, which is 20% or 10%, sometimes property to property, which is only on CAGR. So if you hit a 8% capital appreciation on your asset, we take 20%. Now, this is the biggest change we're trying to build into the platform or in the entire industry in itself. So let's say a normal private equity fund, there are multiple private equity funds which are running in the market. they charge a 2% and a 20%, the 220 ratio, right? And their 20% is on IRR, which means if you hit an 8% IRR, they take 20%. Now, we're generating rents itself of 8% for that matter, which means any appreciation you make, they take 20% and go home. We wanted to change because of us being so asset light, being agile. We said, hey, if the entire money is investors, they are taking the risk. They should be rewarded the most. And let's get rewarded only if that performance of that asset or that investment is doing very well for them. So that is why we've kept the bench high, so high for ourselves as well, because so that we identify the right assets and keep proposing it to them. So 20% performance is only on an 8% CAGR rather than the IRR which the market charges.
So let's break that down for our listeners in terms of what am I getting that is not going to be charged, and what am I getting where if there will be a profit share, right? So I guess that what I'm getting every year is a rent, and that's a direct pass through to me.
So from the rents, we deduct 1% management fee, which is for all the efforts, getting the dashboard for you, getting a trustee who's maintaining your documents, taking care of the entire rent collection, distribution, directorship, etc. All that is covered as a part of that cost. The performance fee is on exit, right? So imagine you invested 1 crore and you generated whatever rents you have. I will do management fee already, so there's nothing beyond that. Now, for 1 crore you invested at the end of 5 years, if I take an 8% compounded, technically you need to make about 1 crore 46 lakhs. Now, if you sold the asset for 1 crore 50, the 4 lakhs, which is more, I take 20%, which is 80,000. So for a 50 lakh return, we build 80,000 as a fee for ourselves for that matter, which today in market, because your rental returns are that, for that 1 crore 50 lakhs, they'll take 20%, they'll take 10 lakhs and go. Right? So there's a huge difference from 80,000 to 10 lakhs, which we're trying to change and offering to investors. So you pay us a management fee for managing your rents, and that is only for those months when there's a tenant in the property. If there's no tenant, we stop billing you the fee. Period is that. And then when you exit, if you hit an 8% CAGR, we take 20% over and above that.
Okay, let's address the elephant in the room as the cliche goes, and it's a hairy topic. What are the risks out here in commercial? I mean, and I'm talking about the industry in general, and since I'm entering into it on an individual basis and not via a trust, how exposed am I to that risk at Strata? And we can talk about risk because this is such a it's a well understood topic. So stuff like tenant defaults, what happens to me? Someone encroaches my property, what happens to me? Or probably specific to Strata, what if a property that I have bid for doesn't get fully funded? Will I get my money back? So and if I have missed any risks out here, please feel free to add them.
No, definitely. Thank you for this question. This is, in fact, the most important question which people should be aware before they invest with us or any real estate for that matter. So first is, I'll answer your first question. What if we fail a funding of an asset? So when we fund any asset, we take only 10% of whatever you're looking at investing. So if you're looking at investing 25 lakhs, we only take 2.5 lakhs from you as token advance, which is parked into an escrow account. Now, only when the entire property is 100% funded, let's take an example. If it's a 25 crore asset, the minute I have 2.5 crores in our bank account, which is 10% of all the investors' money, is when we say, okay, guys, the entire asset is funded. Now we're doing a drawdown. Please transfer the balance, and then we register the asset after doing private placement, etc. on their behalf. So until then, your money is only 10%, which is lying with us. And in the event we fail, we return the money back because we failed as a platform, which means I didn't identify a good asset which the investors were wanting to take. We return the money back with fixed deposit interests to them. So which means if you're parking any money with us, your money is not idle at any given point of time, right? So that is one part which is there. Now coming to the risk part of it. Now, so we do a lot of vetting before we buy any property, right? Whether it's title, the tenant risk, etc. We handle everything. Now, any grade A property which a grade A developer is building, he does a lot of due diligence himself. 99% of the times, they already have a financial investor, which means a bank or a large fund or an NBFC who's lending them money to develop the entire property. They've done their financial legal risk also at the same time. Then comes a grade A client. Any grade A client is not going to take a property just by the name of it. They will come and verify who's the owner, what are the risks, the title clearances of that property, and then they will sign the lease also at the same time. And then we come and say, okay, now I want to buy the property, which means an asset is already vetted by 4 different law firms, and then it is coming at the same time. So from a legal risk, it is mitigated at a larger level. Now, other risks, which can be accidents, disasters, etc., we take insurance for all our assets. So that has also been taken care of. But the biggest risks you are left is the tenant risk. And here's how we mitigate. Like, because you don't expect a tenant to stick around in your property forever. Tenants will come, tenants will go. There will be a newer tenant which we will identify. So one is, how do we mitigate? We look at assets which are leased to tier one tenants, which means a lot of due diligence the tenant has already done before he's picked up a property. And any tenant does not come with a small 2-year, 3-year mindset, right? They invest into fit outs. They do a lot of study because they need to ensure socioeconomic around is great, because their employees need to come into the properties for them to work in that environments. We buy assets with long-term leases and lock-ins. The shortest lock-in on our platform today is 4 years. We typically don't take any assets which has less than a 3-year lock-in on a platform, with a minimum 5-year to 8-year kind of a lease. Average lock-in on our platform is today about 7.5 years. So, for 7.5 years, if you've invested, your client is not leaving the property, which means there's a guaranteed of 7 years of rents, which the tenant would give you. And in the event he defaults, there are enough and more precedents of how to claim that money back from them in the future. Now, we've been selling these assets, like I said, since December 2019, and all our tenants have paid rents, because again, you have lock-ins, etc. You don't have to worry. Now, there's another risk, which is stagnation risk, which is effectively saying that, hey, your property is not increasing in value because, let's say, there's too much supply in that market and there's less demand for that matter, right? So that's another risk which can be there, which means you're still generating rents, but your value appreciation is not happening on your investment, which can happen, which is why we tell our investors that please don't park all your money in one property, diversify across 4-5 properties, that even if, say, in one property your tenant leaves or the other property there's no appreciation, net, you're still making a decent return out of your investment portfolio. Now, answering another question which you brought, what about encroachment? See, we don't buy empty lands. We buy completely developed assets at the same time. So that issue typically never happens on our platform.
No ghosla ka ghosla out here.
No ghosla ka ghosla story.
Okay. So follow up on the SPV structure. Within the SPV structure, are all the interests of investors equal, in the sense that, like, for a corporate, I know that I am minority. There are promoters and there is this. How does it work in an SPV? Do I have any protection for my rights versus, say, a larger investor?
So whether you invest 25 lakh or you invest 25 crores, everyone's interest is treated equally. Any decision with respect to a sale of an asset is done with a 75% shareholders approval. So 75% of the people come in and say, okay, let's go ahead and sell the asset. We sell it. With respect to leasing, 51% shareholders approval. Question might be asked, okay, what if in case you go and leverage the asset without me knowing you pledge the asset, which, we've heard multiple issuances of such happening in India as such. But having said that, that is 100% shareholders approval. So now all these things are put in the AOA, which is all the charter documents, and I can't change that charter documents again without a 75% shareholders approval. So the idea is to make it a very simple platform. Also, at the same time, all the interest, whether you put a smaller amount or a larger amount, for a larger investor, that larger amount might be a smaller amount. And likewise, for a smaller investor, it can be the largest investment he's making as well. So we look at it from a business standpoint, which is keeping it equal and neutral for all. But to protect minority interest, we've kept a maximum investment threshold of 25% of the asset value, which means we don't allow one investor to own more than 25%. Having said that, 25 is the threshold, but we honestly internally do not allow anybody to own more than 10%, because there can be a situation he owns 25 and gets another friend to own more and controls the sale of the asset as well. So 10% is kept as a threshold limit where we do not allow people to own more than that. And with that respect, everyone is neutral and no one person can influence the way a special purpose vehicle should operate.
Okay, just getting into the final leg of this recording. What's my income stream like out here? What am I looking at? How often is rent paid out to me?
So we receive the rents from the tenants monthly. We distribute the rents monthly to them. Now we have smarter investors where if you're generating about 8-9% in terms of rental returns, they make 9-10%, because what they do is they make a sip of the rental returns which we are generating for them on a month-on-month basis into, say, a direct debt fund or a recurring deposit itself, whatever. But there are smart investors who keep doing these things to maximize as well. So everything's paid month-on-month to them, so they can prepare their cash flows accordingly, basis that.
Sure. And how does liquidity work here? In the sense that, what if I want to exit suddenly? I have an emergency. I need to take my money out. Do I have, do you guys bound me to lock-ins, which I have to just accept?
So we generally advise investors that if you have less than a 3 to 5 year investment horizon, please don't invest with us or invest in any real estate product, because real value appreciation takes time to mature. This is not 2007 where property double ho gayi overnight. We are in a mature market and a very competitive market also at the same time. It takes time for that market to mature for you to generate those kind of returns. So, however, we understand that liquidity might be a major concern for investors, and we offer exits through multiple ways after a mandatory 6 months lock-in period, which we have today on our platform, which can change over a period of time. But right now, it's a 6 months, you can't exit no matter what. Now, first is an asset sale. Say after 5 years, we see that the asset value has increased. We go back to our investors and do a simple online poll and say, do you want us to sell the asset? These are the parameters. Here's all the data of all the sale transactions which are happening, all the lease transactions, the occupancy in the building, etc. If you want us to go out in the market and sell for us, we get 75% majority, which is 3/4 majority saying, yes, go ahead and sell the asset. Then we go ahead and sell the asset. Second is private sale. You as an investor can get your acquaintances, your friends, family, and you can sell your holdings to them as well. Now, you can sell at whatever price you wish to, but we inform the investor who's buying to what the market price is as such. So we give them the valuation reports, etc., and give them very well aware, because we don't want people to trade at a double the price and eventually that person, because I'm then obligated to give those returns to them, which I honestly will not happen, right? But you're free to sell it. It's a simple share transfer, so it happens in less than an hour's time itself altogether. Third is we have a resale market, which we have as well, where investors can list their holdings when they want to do it. Now, like you said, this is illiquid. This is not liquid as what a gold or a stock market can be for that matter. So you need to have, we recommend the price at which you should also look at liquidating so that investors can come and invest at the same time. But yeah, that's pretty much what we do. So come with a part of the wallet share, which is your long-term investment, which you don't need it immediately, during an emergency for that matter. Use your fixed deposit, your gold investments for that. But if this is not long-term, just do not invest with us or any other real estate platform itself. Now we understood Indians very well, and we said, "Kya, jab tak sale window nahi doge, log kharidenge nahi." So we said, okay, let's create a dedicated sale window where investors can take a small haircut of 2% on their holding price and incentivize a buyer also at the same time, where they can participate and own that asset also at the same time. So that's pretty much the way one can liquidate their investments through multiple ways. But having said that, reiterating again, if you have less than a 5-year mindset, just do not invest with us at all.
Yeah, I mean, the logical question is, next question is, what about tax, right? How do I get taxed out here? Am I treated differently because I'm part of an SPV, or when you sell, that's capital gains, rent is income? How does that work for me?
So taxes are very clear. We deduct TDS and remit the money to you on a month-on-month basis. So subject to your tax bracket, you are taxed. So on the marginal rate of tax, pretty much to what a REITs is also offering today. But if you have your Form 15GH and if you can submit this to us, then we don't deduct TDS, we remit the entire money to you. Now for NRIs, similar structure, subject to your tax residency certificate and the DTAA, double taxation avoidance agreement, which our country has with your domicile country. We have different taxation in terms of TDS for you. Otherwise, it's a flat 30%, which we'll deduct as TDS and remit the money. Now, this is on the monthly rents, which goes to you. Now, coming to when you sell, it's short-term capital gains and long-term capital gains. So if 24 months is the holding period, if you sell beyond 24 months, then long-term capital gains tax is applicable to you. But beautiful part of that is you can take indexation benefit also out of it. So if your property is growing at 5%, your indexation in India is also at 4 to 5%. Net, you're not going to pay any taxes at all in terms of your value appreciation on your investment. If you made 6% and your indexation is 5, then 0.2%, 20% of that is what you're paying. So 0.2 on 6% is what you're paying. Still substantially at almost 3% is what your taxes are at the end of the day. So great for investors who are looking at a longer investment horizon, for them to maximize their money, and they can keep creating returns for themselves, which is tax efficient, I would say.
Okay, last question, Sudarshan. I've got a feeling that this, let's assume that this actually takes off. Just give me an idea of size out here. How big are you guys? Whether it's number of clients, asset portfolio, any trends that have happened in the last, since you started. How have the real world yields and IRRs shipped out? It just helps our listeners to understand Strata at a granular number level.
Let me first give you an idea of the market opportunity and then come to what we're doing, right? So today, we have 600 million square feet of office space. We have 300 million square feet of warehousing space. I'll just take two sectors, keep retail, data centers, etc. aside. Now, office space is growing at 30 to 40 million square feet every year, and warehousing is supposed to double in the next 3 to 4 years, right? So you see the amount of opportunity which we're going to sit on, and us as investors who are parking money in fixed deposits or in residential real estate, let's go and sell the India story, right? I think in one of the Harshad Mehta's series, which is saying like invest in India, I think it's time for us to invest in India, right? In a big way altogether. Now, on our platform, like I said, it's been about 18 months odd since we've been running this. We have over 10 properties which we have invested till date. We could have done better. We realized something that we can sell an asset online, but the seller is not selling his asset to me online. So, the demand side is easy, but the supply side was easy. Now that the markets are opening, we are seeing a massive opportunity opening up left, right, and center. So we have invested about 480 odd crores today in 18 months. We are very proud of what we've achieved, but we could have done more. And that's when we are very pumped that we can do this and make this $1 billion AUM in the next 3 years. So we have close to about 15 to 18,000 users on our platform today, but 1,000 plus have invested on our platform. Our repeat is about 30% on our platform, which we're very proud of, because investors who started with 25, who initially might have concerns with respect to, can I buy real estate online itself, right? So those apprehensions and how we've been doing is far out. And now they're doubling down on their investments, investing with us. So the repeat is a great testament for us to what we're doing. NRIs are a big audience in our platform. We have about 20-25% of our investors today as NRIs. Now for NRIs, this is great because they are the biggest victim of the opaqueness of the real estate industry in itself. And obviously in their respective country where they are, returns are dismal. So we have investors who even borrowed money at 1% and invested with us at 8-9%. I never advise investors to borrow money, at your first investment for that matter, but invest money which you can take the risk with, understand everything, and then go and start leveraging yourself. But having said that, we are very confident that this year we'll end up at 1,200 crores in terms of AUM, but a clear trajectory for us to be in 3 to 4 years, $1 billion AUM market. Because is demand there? Yes. Is supply there? Yes. It's all about executing and bridging the gap. So hence, we're investing heavily into technology, ensuring this becomes a DIY platform where investors can just come, start investing and start enjoying the monthly returns. I do a monthly webinar, open AMA sessions with people where, hey, come and ask me anything you want to, how the platform works, because we are in the education phase, pretty much to like Ola when they started out. I could have never imagined my grandmom booking an Ola through her mobile, right? No matter what. But a huge customer change has happened over the years where you can't live without that, right? You can't go on the road, catch a rick. You're very comfortable at your home and the rick is outside your house, right? So we are seeing that this is our education phase. We're trying to build a customer behavior, but as we move forward, we are very confident that Strata will become a part of everyone's portfolio going forward. This will be one of the asset allocation with most of the financial advisors might perhaps start talking about to their folks that, hey, you should start parking a part of your real estate portfolio to Strata itself. So that's the longer vision.
Obvious question. You're doing this, there are probably three others who are doing it or will do it, right? I mean, there is competition going to come because everybody senses the opportunity out here. Give us a checklist. If some of our listeners don't want to go to Strata, they want to look at someone else. I don't know who it is. Could be X, Y, Z, and maybe not today, maybe 3 months later. What are the 3-4 things they should look at before putting their money into this kind of product?
Anupam, this is one of the most important things, and I'm very happy the fact that you asked this question because entry is so easy. Anybody can start this tomorrow. We don't want our investors to burn their fingers, and the entire industry takes for a toss because of a couple of people. So as a platform or as an investor, you should look at 3-4 things. First, look at the platform itself. Who is it run by? What's their background? Who are these guys? Do they come with that kind of experience also at the same time? That's number one. Second, look at, are they institutionally backed also at the same time? Because maybe they might not need the money, but an institutional investor investing shows corporate governance, transparency, etc. also at the same time. Like today, we are backed by 4 large funds. We are backed by Gruhas, which is a fund by Nikhil Kamath and Abhijit Pai from Zerodha. We have Kotak Investment Advisors. We have Elevation Capital. We have Mayfield. These are institutional investors. Like Elevation is backed Paytm, Make My Trip, Book My Show. They look at 100 parameters before they decide to invest with you as well, right? And obviously they see the market opportunity in itself. So this is one very important, that who are they backed by? Who are they? Because that shows the character of the company also at a macro level for you. Third is the track record itself, right? Okay, how many properties have they funded? What kind of tenants? Have they got the rents? Critical for you. Please come and verify if you want to verify anything. Ask the right questions to them. And if the platform is not sharing you that information, run away from the platform, right? So if they have everything in principle with them, they'll happily share it with you also at the same time. Now, with maintaining the confidentiality of the existing clients, they might not share everything, but these are public documents anyway. You can verify them either with the sub registrar or you can verify them on the Ministry of Corporate Affairs as well, right? So definitely recommended that people see the track record before they invest as well. And I think the last point is the team in itself, right? Apart from people, the senior management who runs the entire show, but how transparent they are, the processes which they follow, ask, question everything, right? How do you identify a property? What do you do? What do you select? Why are you buying at this price? Is it at market? Is it at discount? Is it at a premium? Be aware of this as an investor and then decide to invest. So 4-5 things: look at the management, look at the team and processes, look at who they are backed by, and look at the track record before you decide to invest.
Fantastic. Wow. Thanks for that. And so I wish you guys all the very best. You said 480 crores, so you're probably at about 50 mil, 60 mil roundabout. You're going to go to $1 billion. That's a fantastic growth. You've got to, and listen, this is a topic, this is a product, this is an investment that needs more education. I'm glad that you took the time out, and this has gone on for an hour. I don't have any complaints, right? Because I love real estate just for the fact that it offers a very different opportunity. I know that the conversation today is all on the stock market, but thank you so much for your time. You mentioned that you do AMAs a lot. So if any of our listeners has any questions, what's the best way for them to reach out to you or to Strata, to your team? How do they do that?
So one is you can always sign up, and if you're in urgency, you can always call up our investment manager and they'll happily answer all your queries. But otherwise, every first Saturday, 4 to 5 o'clock, there's an AMA session. It's an open session. Feel free. We first 15-20 minutes, we explain you, educate you what we do, and then the balance open-ended for another half an hour where we answer any queries you may have with respect to.
Where is this? This seems like a live session. So is this on Reddit? Is this on Discord? Where do you do this?
This is on Zoom. So the minute you sign up on a platform, we will send back the link for the AMA session, which you can just sign up on a platform. And
does sign up mean I need to have a 25 lakh check with me, or can anyone sign up?
No, anyone can sign up. A 25 lakh check is required for you to invest, but to hear us out, to get yourself acquainted with what we do and real estate in itself. The whole idea is we are people with data. We are people with information and knowledge. Happy to ensure we pass it on to you. It's for free, but at the same time, we don't want you to make costly mistakes, which is very, very important to us.
I've got to love anybody who does that kind of an education outreach for their prospective investors. Folks, that is a wrap. 1 hour episode. I love them. I hope that you also like it because, we really went in depth into a lot of topics. So that's a wrap on this episode of Paisa Vaisa. My guest, Sudarshan Lodha, CEO and co-founder at Strata. Sudarshan, thank you, man. Thank you so much for doing this for our listeners, for taking out the time, for making this an hour-long conversation. I hope you return. Maybe when you hit your first billion or whatever number, I hope that you come back. I love this topic and I love to have this conversation again with you. Thank you so much.
Thank you, Anupam. Waiting for that invitation.
Thank you. And now the CRED privilege tip of the week. Folks, real estate, big one. Whether you're buying a property or whether you're renting a property, do all your details. Each of them is a very different contract. When you're renting, check out all details about the property, the agreement that you're signing. Same thing for when you're buying it. Of course, when you're buying it, maybe the guy who's giving you a loan will be doing the studies for you. But please check the terms and conditions of your contract, whether it's rent, whether it's buy. Real estate tends to be a little bit technical and a little bit complicated. So please spend some time doing that. That is your CRED privilege tip of the week. And thank you, listeners, for listening to this episode. If you're enjoying this show, please do share it with your friends, family, and people that you know. That would be really helpful for us. You can listen to this show and other interesting shows on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter and B_50 on Instagram. Thank you so much for listening to Paisa Vaisa, presented by CRED, the most rewarding credit card bill payments app.
No material on this show should be considered as financial advice. The material on this show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM